Hello everyone, welcome back. Can you believe it's been over a week since our last Hyliion update? So I figured let's do that today, especially since there was a pretty strong price movement this week, right? Early on in the week it went up significantly, and the rest of the week was very choppy with the market selling off. So on Wednesday, I actually sold my some of my warrants at 22.50. I got stopped out. So I'm in the same position as some of you guys. I'm wondering, well, what's left in Hyliion? Is it still an opportunity? Like, how can we play the stock, or is the gravy train over now? So what I'm going to do in this video, I'm going to look at the shares, the warrants, and the options, and I'll try to see like what can we do with these? Is there anything left for us to profit from? So that's what I'm going to do. And then also, where are we at in terms of the merger? Like any big news or anything like that. So I hope you guys enjoy the video. Please like and subscribe, and I'll see you in a second. All right, guys, so when I'm looking to get an update on a company, especially a SPAC, the first thing I like to do is look at the filings. So in this case, with Hyliion, we know that on July 10th, they filed a preliminary proxy statement, which contains the entire document minus the shareholder meeting date. And that's going to be a big catalyst for this stock because everyone wants to ramp up towards the merger, and that's why the price has been going up. So the only thing we know is that the SEC has been backed up tremendously and everything has been really slow. And Hyliion filed two revisions to that text. Now, this is where it gets tricky. I'm not a securities attorney, so this is just me like reading a lot and talking to people and interpreting what I can find, like all of the clues. So I'm not sure exactly if it impacts the clock, if it resets it. So usually they have to wait 10 days after filing the next document, which is going to be the definitive proxy statement. But in this case, I'm not quite sure if these affect it. So from my understanding, if these are not materially significant changes, then it doesn't reset the clock, which means that Hyliion could be filing, or Tortoise rather, could be filing any day. If it does affect it and it doesn't reset the clock, then I mean that would cause more delays and we'd be getting pretty close to the September 15th like window, right? Because as far as we know, the window is from September 15th to September 30th. So that's pretty soon. That's like 2 weeks from now. So the only thing that we could see from the revised version, there was really not that much information. They just talk about the merger, and then it says that they did install the 20 units that we talked about before on some trucks. So now it's a real company. It's not just like Photoshop products like some of the other really speculative SPACs, right? And then the only other noteworthy item lately in the past week or two is Thomas Healy, the CEO, was on Yahoo Finance this week, and he mentioned again same thing, that they installed some products already, and that next year they'll be ramping up, and the year after that, and that they're on track for the ERX. That's basically the entire news in this past week or two. So we're really in the dark. Like there's not a lot going on. The only thing we know is that the price is going up significantly, and now we have to kind of gather the clues to find out why. But in terms of news, we still don't know exactly when the merger date is, and like we have to work with what we have. So we looked at the filings, we looked at the news, we started gathering some clues. Where do we go from here? Well, we know four things. We know that the stock price has gone up tremendously over the past month. It went from on August 12th under $20, now it's above 50, and it peaked around 58. So it ran up 150% over the past 3 weeks, which is tremendous. So what does that mean? Well, it means that, in my opinion, and a lot of people will agree with me, the upside is more limited now than it was before. I know some of you still think that it's going to 100, but still, I believe we can all agree that the risk is higher now than when it was at 20. When it was at 20, we all agreed that it might double and get to 40 plus. But now, not everyone at all agrees that it's going to 100 plus. So now you have to be a little bit more careful about it. What else do we know? Well, we know that it's possible, like we have to consider it, that there might be a delay. We're getting fairly close to September 15th. It's not announced yet. They still haven't announced a merger date. So it is possible that there will be a delay. This has been happening with a lot of the other SPACs right now. The SEC is backed up. Hyliion has done 3 filings so far, like the original one and then the 2 revisions. Who knows if they're going to need another revision? So even though so far we think they're still on track for September 15th to the 30th, I can't guarantee this 100%. So for me, I'm keeping this as a possibility. But we do know also, third, that when they do announce it, that's going to be a big catalyst for the stock, and that's going to pump people again. Like people are going to be hyped. Now, fourth, we know that there's some weakness in the market that's shaping up. The SPY, which tracks the S&P 500, has been on a very big run up again. Massive opportunity there. But in the past 2 days, it sank significantly, even though on Friday afternoon it kind of bounced back, and that was pretty bullish. But still, there was some weakness in the market on Thursday and Friday. And we also know that Tesla is not going to be in the S&P 500 potentially after they won't be in the S&P 500, which a lot of people were expecting and they were speculating that they were going to be. And we know that a lot of the time, all of the EV companies kind of tend to follow each other. Even though it shouldn't be the case, it is what it is. So Tesla has gone from, after the split, 531 to 391 after hours. So you see my point? It's very possible that in the next week or two, there's money that's going to be sucked out of the electric vehicle companies and put elsewhere in the market. So keep that in mind. Even though we don't know if that's what is going to happen, I'm keeping all of those possibilities when I'm looking at my calculations. So let's look at the shares, the warrants, and the options. This is where it gets fun. So now at 50.35, I'm not as excited about the shares as I used to be. When I made my first video on Hyliion, I mentioned that between 25 and 30, I thought it was a good deal. 20 to 25 was very good, and then under 20 was a no-brainer where I just sell my car and buy more shares. But over 50, like the risk versus reward shifted. Now you have a lot more risk and less reward. I mentioned it earlier. I don't think it's going to double again. It's possible, but the odds are smaller than they were before. So we know that it went down from 58 to low mid 40s, and then on MACD we can see that it crossed over and now it's back on an uptrend. And as usual with the catalyst that is the shareholder meeting, we can expect it's going to go up more. So I do see some upside, right? Whether we're talking short term or long term, I still think that $50, there's going to be upside if that's how you wanted to play it. But for me, I would rather go with a stock that's a SPAC, especially that's still at 11, 12 bucks, and I think it's going to go to 18, than go with a stock that's at 50 and hope that it goes to 75. I hope that makes sense. I feel like my risk versus reward is a lot better in the other case, even though I'm still bullish on Hyliion. Also, you guys know that my price target, I'm going to stick with it. After the merger, after the dust settles, I still think it's going to be in the 40 to 50 range. So for me, buying long term at 50 wouldn't make sense. As for the warrants, I still think that they're excellent value and much better than the shares. So right now they were at 19.15, but after hours they went up to 21. So let's use 21. That gives us a redemption price of 32.50, which means that about 30 days after the merger, this is when they're going to become redeemable, right? Eventually, the company is going to call them. But about 30 days after the merger, this is when you can call your broker and ask them to redeem them. Well, at 32.50, you have to ask yourself, do you think that the stock price for Hyliion is going to be above that or below that? To me, I mean, it's pretty obvious that it's going to be above 32.50, right? Even if I expect a pullback, it's not going to be that dramatic. So then you have to wonder, well, at 32.50, is it a good deal? I think if I was going to hold this stock long term, I would be getting a discount if I bought warrants at $21. Now, short term, I do think that there's upside on these as well, right? When it went up at its peak, right, the warrants went up to about 25. Now they're down, but you can see like just clearly that it's bouncing back. And you have more exposure to the stock than you would with the shares for your money, because you can buy 2.5 warrants per every share that you buy. So for me, the warrants are still a very good deal. If I was going to get back into the stock, this would be one of my first choices. All right, so now let's talk about some options. I know a lot of you guys have been very curious about them, and many of you have sent me messages. But keep in mind, this is a little bit more advanced and more complicated, so I'll do my best to keep it simple, but please bear with me. So the first thing I'm going to look at is the volatility. Right now, it's at 94.92%, which, if you look at all options, is considered very high. But for Hyliion, it's actually on the bottom end of that range between the 52 weeks, right? In the 52 weeks, it went between 56% and 241%. I'll explain why implied volatility is super important afterward, but just keep these numbers in mind. And now it's actually going down. It went down 2.47%. Why is that? Well, you have to remember the price went from 40 to 58. When you have extreme movements in price, that increases the volatility. When the price kind of stabilizes, right, there's still going to be movement, but when the movements are smaller, that lowers the volatility. Why is volatility so important? Well, volatility dictates the price of the premiums. And the premiums is what you're paying when you're buying an option and how much you're getting when you're selling an option. So the way it works is as we get closer to the merger, if volatility increases, that's good for option buyers. Let's say that you buy an option for $5. Let's use an easy number. If the volatility goes up, everything else being equal, naturally the price of the option is going to go up. So let's say you paid 5, it might go to 6 or 7, right? So you'll be making profit. It's the opposite if you're selling options. If you're selling options, you want volatility to go down because then that's going to make the option price go down. So let's say that you sold it at 5. If the volatility goes down, well, you might be able to buy it back for $3 and then you make 40% profit. So this is why I don't sell most of the time. I don't sell options before the merger, but I would be buying options. I hope you guys understand it. Higher volatility, better for buyers. Lower volatility, better for sellers. So naturally, since we're getting to the merger, the normal trend would be for volatility to go up and for it to be better for option buyers. So let's look at the September 18th expiration date. We have a lot to talk about, so I'll have to be fairly quick. But in this case, I don't really like the calls. 750 for the $50 strike price is 15% premium. That means that you have to reach 57.50 just to break even, and you only have 13 days. But the 13 days includes weekends, which means that you really only have about 9 days of the market being open to not only get to 57.50, but also like for it to go higher so you actually make your profit. Now, if it pops on Tuesday or Wednesday, right, this is going to go up. So if you were to cash in then, you would have made a profit. But still, just you're going to be fighting the time decay so much that for me, the risk versus reward is not good. Of course, if you bought these like 2-3 weeks ago when the stock was at $40, then you're probably rich by now and you don't need this advice. But let's say that you wanted to open a position on Tuesday, I don't feel like these would be good. Selling covered calls is one of the cases where even though normally I don't sell calls before the merger, I think this is one of the fringe cases where it would make sense because the stock went up so much so quickly that right now at those range, like in the 60s, it's time to lock in some profits. So if you were to sell a contract at $60, that means that if it stayed under $60 before September 18th, you'd keep the premium. Right, for one contract, you'd be keeping $470. But if it goes above $60, then you would have to sell your 100 shares or however many contracts you sell, and you would be collecting basically $64.70 per share that you have. So let's say that you have 100 shares. I mean, you're selling them at $64.70. So if you bought them at $25, I mean, you got a pretty nice profit there. And now for the put side of the equation. Well, when it comes to SPACs coming into the merger, I don't really like buying puts. I don't think it makes really any sense because the natural tendency is for the stock price to go up, not down. So yeah, of course, if you really want to protect your downside, the black swan type events, you can buy one really cheap. But in general, I don't think it's worth it. What does make sense, and this is a little bit more advanced, so if you guys aren't familiar with options, you do your research before that. Like this is a very basic introduction. Well, what I like to do is sell spreads where, let's say I wanted to sell a spread between $45 and $40 strike price. Well, the way it works is I would be selling this one and collecting $430, and then I would be buying this one at $250 to protect my downside. So the way it works is I would be risking $5, right? And I would be collecting $180, the difference between $430 and $250. So basically, for every contract, I'm risking $500, and my potential gain, if the stock stays above 45, is $180 per contract. So this is something I do all the time, right? I talk to you guys about my theta strategies. This is the type of stuff I do. I like the fact that it's limited risk. You know ahead of time how much you're risking and how much you can make. In a case where we think that the stock price is going to keep going up, you have to evaluate if this is an option for you. But of course, if you guys want to do stuff like this, do more research, right? You can lose your money fairly quickly if it doesn't go your way. So let's wrap up by talking about the October 16th expiration date options. And here, a lot of the comments are going to be the same as the September 18th one. The main difference is that the premiums are much higher because there's more time decay priced into the premiums. So here, $50 strike price, $14.10, meaning every contract you have to pay $1,410. To me, the risk versus reward is just not good at all, right? Even if you're very bullish on this stock, like just go with the warrants. Like this is too risky for what you get. Now, selling covered calls here, I kind of like it. I mean, $65, you get $10.20 premium. That is fairly interesting. That means that you're collecting $1,020 for every contract that you sell. And let's say that the price does go up, right? Let's say it goes to 80. Well, then you're going to be selling at 65 plus the premium you collected. So it's as if you sold for 75.20. So even if it went up to $80, you would have lost just a tiny little fraction. So for me, this is a pretty good deal. I mean, whether you guys are bullish or bearish as to the merger, I feel like this is a pretty good like risk versus reward. Same thing as I talked about earlier when it comes to selling spreads, right, for puts. I feel like this is a pretty good opportunity. Look at this one here. You would be getting 220 for your $5, so that's 44% potentially in 1 month. It's hard to ask for more. Now, do you think that the stock's going to go under $40? It's possible, so you have to know how to adjust. But assuming you do, this is another option for you. So I'm sorry, guys. I had to kind of go over these fairly quickly, right? It's just to give you a little bit of an insight on how to analyze options. I wish I could talk about them more, but then the video would be way too long. But I hope you enjoyed the video. Again, for me, most of what I could analyze, the warrants are still the best deal. So if I get back into the stock, if I buy more, like if I add to my position, I'll probably be adding warrants again. So I'll see you guys in the next video. Thank you for watching.